Hello and welcome to BQ Prime. Joining us today is Mr. Rohit Anand, Chief Financial Officer at Tech Mahindra. He's joining us after the company's Q4 results. The revenue growth was flat and the profit dipped and margins were a miss as far as Bloomberg estimates are concerned. So your profitability has dipped both sequentially as well as annually. What is the way back from here in FY24 that you see?
Yeah. So I think from a quarter perspective, let me just decode a little bit. When you look at the reported number, it's down 80 basis point from a quarter-to-quarter perspective. Now, when you split it, two drivers. One, foreign exchange was a headwind for us of 60 basis points. So if you add that back on a constant currency basis, the dip is only 20 basis point. When you look at 20 basis point, two different impacts on the gross margin. There's an expansion of 70 basis point, predominantly driven by productivity actions that we've been working on, and this time centered a lot on subcon reduction. So that has helped us expand the gross margin by 70 basis point, x the currency impact. But the SG&A has gone up by 90 basis point, and hence the 20 basis point constant currency margin impact. And SG&A is a result of two things. One, we continue to invest in the business long term. We've not paused that based on some of this, reduction in growth that we've seen versus the first half of last year. We continue those programs, plus some year-end accruals, which will normalize as we move into next year. So when you see at the quality of improvement on gross margin, which is what we focused on, I think that trend of effort is reflecting in the numbers. It is just not apparent from a reported standpoint because of FX impact that we have.
Would you give us some color on how the various business verticals have performed, specifically in the case of telecom and 5G, IT services, and something about BFSI, especially in the backdrop of the macro uncertainties that you have faced in the quarter?
Sure. So in terms of verticals, communication vertical has grown on a constant currency basis, almost more than 1.5% for us this time. I think this is continuous.
This is mostly because the 5G
5G is an integral part of the growth from a telecom standpoint. The technology cycle is still in an early stage. When you look at the global penetration in 5G, it's still in the late teens or early 20s. I think that focus from each telecom operator will continue to drive 5G. So it's a continuous opportunity. So they continue to see 12 quarters of good performance from a segment perspective. When you look at BFSI, BFSI for the year, once you normalize for currency, has performed almost 10% because we discontinued certain non-strategic business also in BFSI. So normalizing for that, it's still operationally grown 10% with some headwind that we see in the segment because of the recent macro environment that you see on the segment. So we'll continue to work with our customers on how we work with them closely to help them through any specific impact that they have on changing environment, right? In terms of other segments, I would say manufacturing and specifically aerospace is growing positively for us. We've grown double digits again on that. As we look into the future, that's a segment with a lot of technology adoption will continue to grow. High tech is a vertical that grew more than 20% for us last year. And with the recent trends around certain slowdown in the high tech vertical, that's a segment which will relatively be weaker versus last year. But we'd articulated that healthcare is an area where we were restructuring this year, so hence the growth was negative. This year, as we move forward, that will offset some of the impact of other verticals because healthcare is going to move positively for us.
So against that backdrop, how is deal making looking now? So is there a slowdown in decision making, client spending? How are the next 2 quarters in that respect as well? So is there a slowdown that you expect? Are you seeing?
Yeah, so I mean, when look at 2-3 data points, we can say first, from a pipeline perspective, pipeline is similar to what we've seen in the last 3-4 quarters. So I don't see any drop in the pipeline. When you look at decision making, I would say there's much more diligence in approving and signing off deals, which is slightly increasing the closing time of transactions versus what we saw maybe 3 quarters back.
Is that weighing on the conversion from deals to revenue?
uh, Once a decision is made and we announce TCV, the conversion really is similar. That doesn't
Okay.
change. But when you have a pipeline which takes earlier was taking, let's say, 90 days to close, which is now taking 100, 120,
Okay.
that elongates it. That's what
Got
I'm
it.
talking
Got
about.
it.
So once you announce and sign the deal, I think conversion from there is not really an issue. Uh, uh, so I think that's the second data point. And then third, there's a little bit of mix change in terms of pipeline as well, because relatively we had a higher proportion of digital transformation projects post COVID. A lot of people wanted to adopt technology, change their business model. I think that is continuing, but displaced partially by a lot of deals around efficiency now. So I think there's a little bit more focus from people to drive efficiency, and in that aspect, the solutioning changes a little bit. So mix change, but I would say otherwise from a
For the next 2
size,
quarters.
I would say next 2 quarters, relative to, I mean, depending on what phase do you kind of compare it to, but I would say,
Say quarter on quarter. So Q4 has been
yes,
there, Q1 FY24,
yeah. So
Q2 FY24.
so it's
all sequentially.
so pipeline's great. Timing is a little bit elongated, and with that, I think it's also a matter of how good, the companies you're working on, because the deal closures for a lot of companies are, in final 30% of the time. So depending on how that goes through, our view is that it should continue to be the range we are. But given the more diligence that I spoke about, it's always uncertain to say really would it close in March or April. So that's
Correct.
an area which is a little bit more uncertain than what we saw in the past.
One final question. Last month at the investor day, you carved out the product and platforms business and you're investing rupees 700 crore over the next couple of years to make it a billion-dollar enterprise. Given the slowdown that you have seen in Q4 now, the numbers and whatever, does that investment, does that spending change? Are you recalibrating your expenditure towards products and platforms?
So I think we take a little bit of the difference from Mahindra as a group and Tech Mahindra is that we take a little bit of a longer term view in all of these decisions.
Okay.
And you look at, it was easy for us to, think from a short term perspective and not invest. And hence, in SG&A, we could have shown a better outcome, but we continue to invest because that's the right thing to do for long term. Similar concept, we continue to drive better returns to our shareholders. So we expanded our dividend this time from 45 to 50, right? So that's 11% expansion. And when you look at product and platform, that is a strategy that we define for long term. It's not a short term strategy. So we will continue to invest in that and work on a structure that makes it efficient for us to grow that business, because it's a little bit different from a typical service business. You need different measurement criteria, you need different investment, you need different way to look at that. So hence we are kind of creating a working model and a structure that helps us unleash the growth potential that has. And that journey we explained in our investor day and we'll continue to.
One final question. You have a new CEO coming in by the end of the year. He's a BFSI veteran. We know that BFSI is not your biggest revenue generator. So how do you see this new incoming CEO bringing in his knowledge towards a segment that industry-wide contributes 35% of the revenue? So what does he bring to the table and what are you expecting?
Yeah. So for us, BFSI is upwards of 15% as a segment total. We've touched a $1 billion. I think, as you rightly said that, some of the peers have a better, kind of penetration of that vertical versus their overall size. And hence, not just in BFSI, the view is that the continued experience that Mohit brings in from his past experience as a company will benefit out of that. And that's what the board decided to get him on. So we're pretty excited to get him on.
Thank you so much, Mr. Anand. It was great talking to you.
Thank you.
Thank you so much, listeners, for joining us in. This is Tushar for BQ Prime.